Things are hairy right now in the stock market, and there's a lot of economic uncertainty. If you're new to investing, headlines and the talking heads will scare you or keep you out of the market, or even worse, tell you to buy a specific stock that crashes the following week.
Yeah.
The thing is, times like this are when real opportunity presents itself. And often the time with the most volatility is the one with the most potential gains. That is, if you know what you're doing. Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And in this video, we're diving into the nitty-gritty details of how to invest in the stock market and make your money work for you. So if you've been thinking about investing in the market or you've dabbled in it, would you call yourself a novice or a beginner? You're going to want to watch this video all the way through. And you know what? Even if you are a seasoned investor, it doesn't always hurt to go back and review the basics.
Exactly. Investing in the stock market is not for the faint of heart. Trust me. It can be a wild ride with high risk and even higher rewards. But if you're willing to take that leap and put in a little bit of effort, investing in the stock market can be an exciting and profitable venture. Here's the key. When there is fear and panic like there is now, and you know how to take emotion out of investing, that's the key. You can make some serious money by doing it in times like this. Before I dive into the 5 steps to successful investing, I want to address the concern of many. And Michelle, you alluded to this in the intro. Is now really the time to invest? Should I wait? Or should I even invest right now? My answer to this is, if now isn't the time, when is? Would you rather buy when the market is, let's say, 20% higher than it is here today?
Yeah.
When the market or the economy is doing better, maybe there's no inflation. Here's the key. Don't try to time the market.
I was just going to say that. That is the number one rule.
Number one rule. Don't try to time it. Come on. One rule I've used is buy when everyone is selling.
Sure.
If you believe in a stock and it meets your overall objective and your long-term goals, now's the time to buy.
All right, Brian, let's get into it then. What is step 1?
Step number 1, we talked about emotions. Let's get your head in the game. Okay. So before you start investing, you need to have the right mindset. You need to get your head into the game. Investing in the stock market can be risky, and you need to go at it with the right perspective and mindset. Here are some key things to keep in mind.
Okay.
Investing in the stock market is not a get-rich-quick scheme. It's a long-term game that requires patience, discipline, and a commitment. You need to be willing to take calculated risk and not to be afraid to make bold moves when necessary. You need to have a long-term perspective. It's not a short-term game. It's a long-term investment. It requires you to stay patient and stay committed to your investment goals. You need to be prepared for the highs and the lows. And trust me, there will be days you're saying, oh my gosh, 1,000 up, 1,000 down.
Right. Especially
the stock market's volatile.
Earning reports, CPIs, PPIs, and
everything.
It's just
everything. You need to be disciplined. It's that simple. Investing requires discipline and a commitment to sticking to your investment plan. Resist the temptation to make impulsive decisions.
Brian, I want to talk really quickly about that investment plan. There are, I know lots of people who, there's a difference, obviously, between the traders and the investors, but even investors have that plan. I have one where it's like, okay, I'm going to do this. These are my goals. This is what I'm going to do. Is it something that you look at regularly?
Yes. Me on a
tough.
Yeah. Me on a personal basis.
Yes.
Yes. And I look at it because you said it correctly. The difference between an investor and a trader.
Yeah.
One of the similarities, though, Michelle, is they both have goals.
Right. And they follow that plan.
They follow that. When I step into a trade, for a trade only, I know where I want to exit.
Right.
And if I make it to that point, I'm a happy camper. If I get 75% of it, I'm a happy camper.
Yeah.
If I lose, I know I lose, but I also know how to limit my losses. So it's a game as far as understanding, look, here it is, be disciplined at it.
Right.
If I can go up 30% on this, I'm good. I'm out. That was my goal. Okay.
Well, and if that plan continues to work for you, it helps you stay in that mindset and really does help you resist the temptation to make those impulsive decisions.
Exactly. Get your head into the game. You truly have to. So
All right. So step two.
Step two, research like a boss.
Okay.
And this is where it's serious. So when it comes to investing in the stock market, knowledge is power.
Sure.
You need to know how to do your homework and research potential stocks before making investments.
Right.
Take a look at these items. And I will tell you, on a personal note, I have used Yahoo Finance for over 30 years as my go-to source for info on stocks. I don't need to pay for no high-end subscription programs that they're out there that people try to sell you to get you better. Sure. Yeah, no, that don't always work, folks. But here's what I look for on Yahoo Finance. First, how about the company's financial performance? How are they doing?
Right.
You can review their financial statements, their balance sheet, income statements, and cash flow statements all online today. These documents will help you give you a better understanding of the company's revenue, expenses, and their overall financial health.
Okay.
From there, you can also evaluate industry trends. Look at the company's position within their industry and assess their competitive advantage. Are they positioned to compete within their market? Are they innovating and staying ahead of the competition?
Right.
Or are they maybe the last one and may end up being bought out by one of the bigger boys? You just don't know, but you can research that.
Got it. Okay. I have a quick question on under the company's financial performance. Is researching the management team part of that?
That's a huge part of it.
It is, right?
Yeah. And think of it this way. Like you'll see a company, like a founder of a company exit because he had an exit strategy and he got out, put a CEO in place. And then all of a sudden the company drops, the stock performance and all that drops. And then you'll see a founder come back to a company. Yeah. We've seen this many times over the last few decades. And well, guess what happens? As soon as the announcement that the founder's coming back or a CEO that was very successful in the same line of business somewhere else steps into the platform, all of a sudden you see a spike in the stock because not only did they buy the company, they're going after the founder or the CEO that's running it and the history of what that person has done in the past. So.
Okay. All right. What else do we need to be looking for when we're doing research?
Yeah, and their research, does the company have any growth potential? Yeah. Can the company expand their reach and grow their revenue over time? And I would say the last thing on that is the reputation of the company. What's the company's brand reputation? And are their customers loyal?
Okay, I have a quick question on this when you're doing your research. So understanding you're looking at financial statements, management team, balance sheets, cash flow, and then just evaluating industry trends, right?
Right.
Get that. But this is going to the source. Do you try to stay away from the talking heads?
Yes, all day long.
Okay.
Because each one of them
going directly to the information, the raw data.
Yeah, give me the data that they have to file as a disclosure.
Sure. Okay.
That's where I go for the data. I mean, yeah, you can hear an investor or a hedge fund come out and say, hey, here's why we're invested in this company. That comes into play a little bit, but it's almost like, okay, that gives me information to go and do my own research and go deeper and make sure it fits my goals.
Sure.
So.
Okay, great. All right. What about step 3?
Mixing it up. You need to diversify your portfolio by investing in a mix of stocks from different industries and different sectors. And here's how I do it. I spread out the investments over a mix of stocks from different industries, different sectors. And this helps minimize the risk exposure and also helps protect my investments from market volatility. So if one stock drops 30% today, well, guess what? One stock that I was looking at this morning had their earnings report last night. Guess what? It's up 39% today. Well, that all gets blended into one big investment portfolio.
Got it.
There's the key. You're going to have some winners. You're going to have some losers. Just remember that.
Sure.
Also, consider the market capitalization.
Capitalization?
Yeah. How big are they?
Yeah.
Are they large cap, mid cap, small cap companies? This also helps you diversify your portfolio and minimize your risk.
Okay.
Also, look for overlap. If you see companies in the same industry, we're doing the exact same thing and they track side by side as far as their risk tolerances, their performance, this, that, and the other, you might want to diversify that a little further and not only have, not have all of the same type of stocks in that portfolio.
Okay.
Because if that industry gets hit hard in like a one-day event or like semiconductors and all of a sudden, something wiped out Taiwan, and here comes all the semiconductors
Sure.
dropping. You don't want to be over so heavily
Overexposed, right.
invested into that and
Okay.
overlap. So, and then of course the last thing is rebalance your portfolio. It's important to always rebalance your portfolio to get you back to your original desired level of diversification. Like if you started with 60% bonds, 40% stocks, or vice versa,
Right.
just try to get back to that on a, I look at it on a quarterly basis.
And that goes back to your investment plan, right? This is where this is my level of diversification. This is my level of risk. Go back to that and make sure that you're following the investment plan. Yeah.
Exactly.
Okay. What is step 4?
Keep your eyes on the prize. This is fun. When you make your investments, you can't just sit back and watch the money roll in. Okay. I wish it worked that way. But if it worked that way for everyone, I wouldn't be here as an advisor today.
Right.
You got to monitor your investments regularly and be prepared to make any adjustments if necessary. Again, I track all my stocks on Yahoo Finance mobile app, and I don't get paid. It's not a sponsor. Our company,
we're not sponsored by Yahoo.
Sold doesn't do this. Okay. It's just a great app. Okay. But anyways, don't panic when a stock falls. Short-term volatility give you the opportunity to dollar cost average into the stock if you're a long-term goal and your outlook hasn't changed on that portfolio.
Yeah. And I think that's critical. You made something, you said monitor them regularly and be prepared to adjust if necessary. You didn't say if somebody on CNBC or whatever starts panicking, or Dave in the office next to you panics, that you panic.
Right. It's funny, Michelle, I'll just take here it is on my homepage, my desktop. At any given time, I got the Yahoo Finance up, and that's what I do. This is how I track my stuff. So,
okay.
It's
all right. What is our final step? Step 5.
Break the rules.
Ooh, I like it. This is my favorite thing to hear.
I can see you doing this. No, investing in the stock market is not a one-size-fits-all approach.
No, it's
what
not.
works for you may not work. What works for me, Michelle, may not work for you. Okay. Don't be afraid to break the rules and take some calculated risk. The best teacher in investing is your experience.
Isn't that the truth?
Get out, make that trade. And if you make a mistake, learn from it.
It's not a mistake. Well, it could be if you lose, but also really what they always say, every investor I've known, like people that are heavily invested, it's not a mistake if you learn from it.
If you're just getting started, on that same note, if you're just getting started today, I would rather see you lose on your first trade.
100%.
Because if you win on your first trade, the mindset kicks in. Oh, I can do this forever.
Yeah.
Bad way to do it.
Yep.
I want you to lose on your first trade. Go back, analyze it, figure it out. Okay, this is what I did wrong. I won't do it again.
Right. All right. This has been an awesome conversation. Thank you so much. I'm always looking to refine and fine tune my investment skills, and this was really good to go back over. So thank you, Brian.
Awesome.
If you like the content of this video, hit the like button, subscribe. We put out videos on the daily to help you make better decisions for your financial future. And also, offer tips like today, how to make more money, how to be in charge of your investments instead of letting someone else do it for you. So it's really important. There's personal responsibility. We're missing it in this world. All right. Thank you, Brian. And thanks to everyone who watched.
Thanks, everyone. Have a great day.